Are you considering divorce? Are you dealing with it now? Are you on the other side and not sure what comes next? You've come to the right place. Welcome to the Divorce Do's and Don'ts Show with your host, Lisa C. Decker.
Welcome, everyone, to today's show. It's so nice to have you. I'm actually going to be filling in for Lisa Decker today. My name is Marcella Kripe. I am the show's producer, and I am executive assistant to Lisa. She got stuck, that poor thing, on vacation. So I'm going to fill in for her today, and we have an awesome guest that I can't wait to introduce you to. So welcome if you're joining us for the first time. As you may know, our topic today is going to be credit repair and recovery. Honestly, credit issues, credit risks are some of the most common things that we see during the divorce process. And so we're going to help you do it better and get through it safely. So without further ado, I'd like to introduce our host or our guest, Tiara Walker. Tiara is a credit and divorce real estate expert. Her mission is to educate divorcing spouses about credit and selling their home during a divorce. A little bit about Tiara. She has over 10 years of experience in both the financial and the divorce real estate industry. She specializes specifically with her real estate business in with divorcing clients. She's also in the past owned and operated a credit restoration company. So there probably isn't anyone much more qualified than her to talk to us about today's topic. So welcome, Tiara. What do you have in store for us today?
Hi guys, I am Tiara Walker. I will have a PowerPoint presentation that I will present to you guys. And it's just gonna go over credit and your options when selling a home when going through a divorce. So give me 1 second. I'm gonna jump over to my PowerPoint and get started.
Tell us a little bit, Tiara, while you get set up, tell us what brought you to Atlanta, because I think it's nice for people to understand. For those who don't know, she's located in Atlanta. She can help clients in multiple states because I know she's licensed all over the place. Yeah. But what brought you to Atlanta, Tiara?
After college, I came down here because there was more opportunities as far as real estate, and also I was in the accounting field. So I felt it was necessary to come here for more opportunities. And yes, I am licensed here in Georgia, Tennessee, and Mississippi. So if you're going through a divorce in any of those states, my team and I can help you in that area.
Excellent.
All right. Are you guys able to see my screen?
Absolutely.
All right, perfect. So let's get started. So the title of my presentation today is going to be How to Manage Your Credit During a Divorce. And I am Tiara Walker, divorce real estate expert. Here are a few topics we'll discuss. Does divorce impact your credit score? What are some of the common red flags during a divorce that can ruin your credit? Things you can do to preserve your credit and prevent credit issues during a divorce. What risk is there to closing out multiple credit card accounts at once? Steps you can do during a divorce or right after a divorce to start building or rebuilding your credit independently. Options for your marital home and how I can help divorcing clients. So these are the topics we're gonna cover. And the first
It's interesting. Sorry, I cut you off already. I told you I might do that. One interesting thing about those topics that she just mentioned is you're going to notice as she goes through her presentation today that they cover different phases of divorce. Some of these things are things that you're going to want to think about before. Some of these things are going to want to address during the process, and then some of these things won't be able to be dealt with until maybe after the divorce is final. So timing can be everything in this situation, and Tiara is going to walk us through those steps today.
Perfect. Thank you. All right, let's jump to the next slide. Does a divorce impact your credit score? Filing for divorce itself does not affect your credit score at all. But if you guys have joint debts, it does affect your credit score, and how it affects it is basically like if you have any missed payments or late payments on any joint accounts, both of your credit scores will be impacted in a negative way. The third thing is if you have a divorce decree that instructs one spouse to make a payments on joint accounts, I always recommend that you try to get those accounts paid off before the divorce. Because if the divorce decree instructs that other party to make payments, sometimes that party will not make the payments, and now it's still affecting your credit score. So ensure and make sure that you always get those accounts paid off before the divorce is final.
And if you, just to throw in there, if you meet with a financial expert and they, for whatever reason, don't recommend closing an account prior to the divorce being final and your name is on it, as Tiara mentioned, if you're no longer responsible for it, we do recommend that as soon as possible, you get your name off of that account. If you're jointly a title holder, all you have to do usually is make a phone call and ask them to remove you from the account. There may be other mitigating factors there, but sometimes under some circumstances, you can't close the account before the divorce is final. So if your name is on it, we do recommend as soon as possible, you get your name off of there.
Definitely, I definitely agree with you on that, because leaving your name on there will definitely impact both of your credit scores. So definitely get your name removed off of there, and we'll talk about that as well a little bit more in the presentation. So here are some of the common red flags during a divorce that can ruin your credit. Anytime you get a late payment, one late payment can drop your credit score 50 to 100 points. So typically your first late payment ever will drop your score 100 points. So I recommend just ensuring that you don't have any late payments if you're on any joint accounts or individual accounts. Secondly are collections. So if you have late payments, that typically leads to a collection. In order to get a collection removed off of your credit report, you would have to contact that collection company and see if they will remove it. Sometimes they'll say, hey, we'll update it and make it 0. I don't recommend that because your credit scores remain the same. Only way your credit score will increase is if they actually remove it. So you can ask them for a letter stating that they will remove that debt if you make a payment. And that letter will help you if you need to submit it to the credit bureaus if they did not remove it. Another thing is maxed out credit cards. Anytime you have maxed out credit cards, this can affect your individual credit or joint credit. Maxing out your cards decrease your score. I typically tell my clients to keep their credit balances 10% or below. That usually helps increase your credit, but also helps manage and maintain your credit. Then we have tax liens. So if you guys filed a joint tax return as married couples, and you have tax debts that you need to pay, if you don't pay it, it typically turns into a tax lien. And if it's a joint account, that can then go into both of you guys' credit report, which is again affecting your credit. Another thing that affects your credit will be bankruptcy. So if you have an individual bankruptcy account, an individual bankruptcy, that doesn't affect your spouse. But if you file jointly, that will affect both of you guys' credit score. So just be mindful of that. And if you have a bankruptcy, it's typically harder to get a home. Typically from the time you file that bankruptcy, a lender will require you to be within a 2-year period of that bankruptcy in order to qualify for a new home. So be mindful of bankruptcies. I never recommend those, but if you have to do what you have to do, that's on you. And then lastly will be debts. Debts include like mortgages, cars, credit cards, whatever it is. You want to try to separate any joint debt accounts that you have, get them paid off before the divorce is finalized, because after the divorce, it still impacts both parties. So try to, get those debts down. Any questions?
Well, this is kind of where the divorce team comes into play, because sometimes there are legal reasons why you can't close joint accounts during a divorce. Some states don't allow you to touch any of your accounts until the divorce is final. It depends on the state you live in. And some sometimes financially, it may not be a good idea, especially if someone, and we're going to talk about this, I think, a little bit, Tiara, if someone is trying to refinance a piece of marital property. So sometimes it's just not possible. And that's why it's always like, it's ideal, but it is really important to understand both the financial and the legal implications of any decision that you're making during the divorce process, so that you don't end up committing some type of mistake that can't be reversed down the road. So these are definitely guidelines that we're encouraging all of our viewers today to follow. But we always want to verify before we take action, both legally with a legal expert and a financial expert, ideally in the state that we live in.
Definitely. I totally agree with you. Make sure you talk to a financial advisor, CPA, or attorney before making any decisions on this, divorce attorney. But these are, like she said, just guidelines of how to handle debts moving forward. All right, let's jump to the next slide. Things you can do to preserve your credit and prevent credit issues during a divorce. So there are going to be 10 things we'll talk about. Number one, we want to make sure your credit report is accurate. So the first thing you can do is go to my free annual credit report and pull your credit report for free. It doesn't give you an actual score, but if you wanted to see your actual score, you can Google $1 credit report. And there are different companies that are out there that offer a credit report for $1, 7-day trial period, as long as you cancel before the 7 days. And there you'll see your score and everything that's on it. So you want to look at your credit report and make sure everything is accurate. If things are not accurate on your credit report, then you can dispute with credit bureaus to try to get those items removed. Because sometimes credit bureaus put items that are not yours on your account. So you might have something with someone with the same name and it may be on your account. So you just want to ensure your credit report is accurate. Number two, you need to pinpoint what you need to improve. In order to have a complete credit profile, you need to have multiple things on your credit. So it would be credit cards, your credit history, the age of the credit, all helps build your credit score. So the third thing is we're going to talk about is the credit age. Typically, the longer you have a credit account open, the more it helps boost your points. The shorter it's open, you're building credit, so eventually over time, your points will increase. But never close out a credit card account that has a strong credit history, because it definitely decreases your score. The fourth thing is make sure all your bills are paid on time. Like I stated before, any late payment can drop your score 50 to 100 points, and it's very hard to get those points back. So I typically tell my clients to create a bill account, a bank account with just your bills only, and set it up on auto pay so that you'll never miss a payment. How to clear up, number 5, clearing up any collections or charge off accounts on your credit report is another way to improve your credit score. So if you call the credit collection companies and get items removed by paying them a fee and then giving you a letter, that'll help improve your score. Or if you have charge offs, you can call that actual credit card company or whatever company charged off that item and see if it can be removed. Or you can reach out to a credit restoration company to help you in that area. Number 6, ways to improve your credit score. You need credit card accounts. So I definitely recommend always have at least 2 credit cards, because 30% of your credit score come from credit cards. So if you don't have a credit card, you can apply to get your own credit card, your own individual credit card. And if you can't qualify, then you can open up what's called a secured credit card. A secured credit card is where you reach out to your bank, go into your bank, and they would give you a secured credit card. They will require a deposit down of $200 or $300, and then you can use it like a regular credit card until you build up your credit score high enough to get an unsecured credit card. And number 8, limit your credit applications. So if you're not able to qualify for your own credit card, don't just consistently keep applying for unsecured credit cards. If you see you're constantly getting denied, I would go with the option of trying to do a secured credit card to start building credit in order to build that credit score. And then if you have any joint accounts with your spouse, I recommend that, I don't recommend, I mean, if you have any joint accounts, you should talk to your CPA or your divorce attorney before closing out any of those accounts. But you also want to start building your own separate accounts so that you can improve your own credit score. Once your CPA or your divorce attorney give you authority to close out those accounts, then you can close out of those joint accounts. But at the same time, you want to, establish your own separate accounts to build up your own credit score. And then number 10 is just reducing your credit utilization to 10%. I know the rule of thumb is you hear it's 30%, but I typically tell clients you will see the max amount of points when you reduce your credit card balances to 10% or below. So those are a few things that you can do to help improve your own credit score while going through divorce and, just establishing your own credit.
And I really liked the idea of the secured credit card because it is something that will build your own personal credit. Just remember that when you're going through the divorce process, it is important that anytime if you do open a new account, everything always needs to be disclosed. Financial disclosure is very important during the divorce process, especially if you've already filed for divorce. So if you've already filed for divorce, your attorney is going to expect that you will update any records and documents that you have during the process. And they may actually recommend that you limit what you're opening and closing during the process, just because it can sometimes look suspicious, even if your motives are pure. So that's why Tiara is recommending talking with your financial and your legal experts. Another really cool thing that you talked about was that bill account. And this is where budget is really important. So if you work with somebody like Lisa Decker, the regular host of this show, she's a certified divorce financial analyst. One of the most important parts of her process with people going through divorce is helping them understand what their post-divorce budget needs will be. So if you know what it's going to take to pay your bills, that is an excellent idea, Tiara. Open an account just for that and put everything on automatic bill pay. Love it. Super idea.
Yeah, it definitely helped me. So that's how I have all my bills set up. But yeah, definitely talk to your legal team because they will ask you for a financial affidavit and you have to disclose all of the financial information to them. And like she said, that they will take a look at all of that. So definitely ask them before moving forward with any of this. All right, next slide. Thank you so much on that. Sorry. Okay, so this slide we're going to talk about start building / rebuilding your credit independently. It's a little bit of what we talked about in the previous slide, but I'm going to give you 2 companies that can help build your credit. So Credit Card Builder and Self Lender are 2 companies that you can get secured credit cards from. As I stated before, you can also go to your bank and they have different plans for you to get in order to start building and establishing your own independent credit if you only have joint accounts. So that's one positive trade line you can do on your credit to improve your credit score. Another thing is being added as an authorized user to one of your families or friends' account to increase your credit score. For me, I'll give you an example. My father, he had no credit at all and he needed to purchase a home. So I added him to 2 of my credit cards and it instantly boosted his credit score up to over 800. And we then was able to apply for his own credit cards. So he was able to get a home. So being added as an authorized user is a quick way to increase your credit score without taking years to build it.
I am going to jump in on that one really quick. make sure you choose a trusted family member or friend, someone that you know is paying their bills on time. Because because if you're on their account and they're late with their payments, that's automatically going to affect you.
Exactly. So thank you for bringing that up. Yes. So make sure you select a family member that has a credit card with low balance and no late payment. That's key. Don't just jump on anybody's credit card because that will definitely impact you. What typically happens is their credit history from that particular credit card, it will then start reporting onto your credit report. So just make sure they have great credit before they actually do that. And another thing is always keeping your balances between 5 to 10% of its limit will definitely help boost your score as well.
We got about 3 more minutes just to let you know.
All right, cool. So what risk is there of closing out multiple credit accounts? I did this myself. Don't do it. Don't close out all of your credit card accounts at once because that impacts your overall credit score. If you do that, you will have to start rebuilding your credit from the ground up. Your open credit card accounts give you credit history, credit limits, and just credit period. So it helps build your credit score. So never close out multiple accounts, even if it has a 0 balance. Keep it open because it helps build your score.
And this is really, really important for those who are going through a divorce that will need to refinance a marital home. Closing out multiple credit cards at once can actually prevent you from getting approval for a refinance on your home because, like she said, it instantly impacts your credit score. So this is, again, where using a financial expert like a CDFA in conjunction with an attorney will help you make those good decisions on this side of it so that it doesn't mess you up on the other side of the divorce process.
Definitely. Thank you so much for that. All right. So how I can help you, I can help educate you on the credit and financial aspect of it and also help you with the selling a home. And I'll quickly go over those slides. When it comes to selling a home, you have 3 options. Option number 1 is you can sell that home and split the proceeds 50-50, or option number 2, you can refinance. So your credit is important when it comes to the refinancing part. So this is where you need to talk to your CFA, the lender, before you make any type of credit decisions for this step. And refinancing is basically removing one party name completely off that house and just putting it solely in your name. But your credit score has to be up to par, and also you have to have the financial income to just refinance it solely in your name. And then the third option is basically you guys both staying in the house and just splitting the bills jointly as before. So there are your 3 options for selling your marital home. Typically, most people go with option number 1 so that they don't have to deal with the spouse out there, or option number 2. And
it's true because, like you said, option number 3 keeps you financially responsible. So if your divorce decree states that if you decide you're going to keep the house jointly for a while, maybe for the sake of the kids, and your divorce decree states that your spouse is responsible for paying the mortgage, if you're still on it, if they default at any point, you become responsible for it and it affects your credit score. So that's why that third option is very rarely going to be recommended, and probably only between spouses that have been working together through the divorce process that do have a level of trust with each other. And there would be probably some very extreme circumstances where an attorney or a financial expert might even recommend that third option, but it can happen. So it's good that Tiara put it up there.
Yeah, definitely. I did have a divorce story, but I know we're short on time. But yeah, if you guys have any questions, that's the end of my presentation. I'll be happy to assist to answer any of those questions.
Thank you so much, Tiara. That was really excellent information. And before we wrap up, we've got a couple of slides to show our viewers too for some other resources that they can go to. I wanted to mention, you were talking about how sometimes when you pull your credit report, which is so important, I can't emphasize that enough. If you are going through divorce, pull your credit report, as Tiara said, because sometimes in a marriage, spouses will open joint accounts and not tell the other person, whether it's just because they didn't think to tell them, or maybe they thought they already knew. But I can't tell you how many times we've had clients pull a credit report and find out they've got debt in their name that they didn't even know about. So it's really, really important to know what you're looking at right from the get-go before you start figuring out how you're going to divide and pay stuff off. It's important to know what's actually in your name. So really appreciated you bringing that up too. I wanted to throw that out there. Tiara, thank you so much. This was excellent information.
You're welcome. Thank you for inviting me.
So if anyone has any questions, or if you would like to talk to Tiara more, whether it's about your home, which is now her main specialty, or if you do have additional questions related to credit issues, this is how you can get a hold of Tiara. You can also go to our website, www.divorcetownusa.com, and you can find her or any one of our awesome professionals there. So speaking of awesome professionals and resources, I'm going to just share a couple of things with everyone. Okay. And for most of you who have been joining us, most of you already know all of the wonderful things that we have available for you. One of these is the Divorcetown Roadmap. So if you find yourself facing divorce, you're not sure how you want to start, or maybe you guys have already started somewhere in the process and you don't like how it's going. The Divorcetown Roadmap has been designed to help you plan better, whether you're doing it on your own or whether you're trying to work collaboratively with your spouse, which we always recommend. The roadmap can really help you kind of figure out what's the best place for you and your family to start. Some start with children, some start with the financials, and others start with a legal team, but working together. And all of those are options within the Divorcetown system. And we have all kinds of wonderful professionals like Tiara who can help you with those side details like real estate and credit issues as you're going through the process. This is a free download. I highly, highly recommend that you do, that you go ahead and grab this. The ebook will help. Another great resource that Lisa has offered to our viewers is the free divorce financial fitness kit. This kit involves a working spreadsheet where you can start gathering documents that you're going to need, just like your credit reports, your credit card statements, your bank statements, and other things. And there'll be a checklist that you can just get the document, check it off, and then put it in a safe place until it needs to be used during the divorce process. This kit also includes 50 must-ask questions for your attorney. So when you get ready to meet with an attorney at whatever stage of the process, we want to make sure you're prepared and that you get the most out of the money you're going to be spending on legal fees. So this kit is very helpful for that as well. Another very important type of support during divorce is obviously emotional support. So Divorcetown USA sponsors a meetup group, the Divorce Help and Hope Support Group. This group meets once or twice every single month. Our next meeting is actually this Thursday at 7 o'clock. So if you go to meetup.com and you join, you can RSVP to that meeting as late as tomorrow at noon is the cutoff, and you can still join us for the Thursday evening meeting. And finally, what do we have on for next week? Next week, we're going to learn from our past for a more positive future. We have a special guest, Sherry Harden. She's a social worker. She's also a psychotherapist, and she is a transition and recovery specialist. She is certified in these areas of divorce, and she's going to help us next week. One last thing I did want to share with our audience before we say goodbye is Tiara has her own ebook. And that ebook is all about how to get the most out of your marital real estate property. And she talks a lot about that. It's free. It's available on Divorcetown USA in our marketplace. And it's also available right on the homepage of Tiara's website as well. So we want to make sure that you can access that at any point. So once again, we want to thank everyone for joining us today. It has been an awesome episode. Tiara, we were blessed to have you. Thank you so much.
Thank you so much, Marcella.
You're welcome. And we look forward to seeing everyone next week. So with that, we bid you all adieu. Thank you, everyone.